Hello and welcome to Grid Forward Insights, a presentation series where we hear from industry leaders on what's driving the grid ahead. Today we have with us Cassie Bowe, Vice President of Energy Impact Partners, and she's going to share about trends in venture investing associated to the grid and energy landscape among the health and economic crisis from the fallout of dealing with the COVID virus. Cassie, thanks for being on with us today.
Great, thanks for having me. Now is obviously a time of more questions than answers. In that theme, I'm just going to dive into the big questions facing venture capitalists in general, venture capital for the energy tech and climate tech industry specifically, and then the big questions facing utilities and folks who work with utilities. Just a little background on Energy Impact Partners before we start. So we're a venture capital fund. We have about 1.5 billion of assets under management. And what makes us a little unique is that about 80% of our capital on the equity side comes mostly from utilities. So these are, a number of the big name utilities that in the US, in Canada. We have a number of international LPs as well. And our model is to really encourage collaboration and innovation between our portfolio of startup investments to our strategic, to our utilities, and our utilities who have invested in us to be able to gain innovation insights into the portfolio. So starting out at the high level of, just what is going on in venture capital, the big question here is really not whether venture capital has slowed. That's pretty clear from the data, both empirically and anecdotally. The real question is, when will financial VCs jump back into the market? And to me, the question here is not, do VCs think that there's going to be a slowdown? There are VCs activity normally slows down, as you can see in this chart here in relation to downturns. There's a slowdown in investment pace, and then there's also a slowdown in multiples. So it's not a question of if it'll slow, it's the question of when VCs will really come back in force. And the notion is pretty well established that good returns can really come out of a downturn. You see in this graph here that there are really good returns from investments that were made in companies starting, in the trough of recessions. And that's a pretty well established principle across venture capital. But what's really tricky here is that timing is a real concern. So if you're investing in what you thought was the trough, but it's not actually the trough, you can actually lose money. And then if you invest too late after the trough of a recession, then you can miss out on the potential opportunities there. And so in order to answer the question of when VCs will really come back and forth into the market, you have to answer question number 2, which is, when is the trough? And I think it's, clear to everyone that that this is we can't apply normal rules to this situation. And so that's what's really been plaguing venture capitalists in this is, how do we figure out what the trough is here? And when you look at energy tech and climate tech investing, you also have the oil war and oil price drops and the impacts that has on the industry as another variable that you have to consider for, when we're going to be coming out of this period. So that's been the question to answer really for VCs. We've talked to a bunch of different investors in the space and heard a range of views. We've seen funds that are being really aggressive right now because they think now is the bottom, and others who've said, we're fully out of the market for now. So really only time will tell when VCs will come back in force. It could be in a month, it could be in a year. But either way, I think venture capitalists across the board were waiting for a correction in the market. Valuations had been really, really high and arguably out of control, as had been, spending by companies. And so this is the correction that everyone was waiting for. It's just a question of that when we come out of it. I think this is true for the financial VCs. It's actually a different question for the corporate venture capital funds, which brings us to question number 3, which is what's going to happen with the CVCs. In energy in particular, corporate venture capitalists have corporate venture capital funds and direct investing has been a huge part of the ecosystem, and a lot of the gap that we saw in a lack of venture capital for energy and clean tech has been filled by corporates. Even outside of energy investing, even just across all VC categories, corporate venture capital reached almost half of all venture capital dollars deployed in recent years. And what's going to be probably one of the biggest impacts is that corporate funds are really going to struggle to deploy capital through this period as their parent companies deal with cash crunches and reduction in revenue and reduction in OPEX. And so I think that that's something that's really going to impact the energy and climate tech community in particular, since CVCs do play such an important role in the ecosystem. And so the question of when, how much will corporates pull back on their venture investing, and then when will they come back into the market is a big one. Because if you look here in 2009, only a quarter of capital is coming from corporates. To go from half, and then does it go down to a quarter again? That's a big question that we're going to need to answer. Moving on to climate tech in particular, what we saw was really exciting, which was that clean tech was at a peak in 2011, where 16% of all venture dollars went to clean tech investing. A lot of those investments did not pan out well. And the venture capital industry really shied away from the space. But starting in 2015 or so, we saw a real slow increase in funding, which right before all this was peaking in a lot of climate tech interest. I think the rebrand from calling it, from stopping to call it clean tech to calling it climate tech has really helped. And you can see on this chart that there's really been an established increase in funding for both venture capital and private equity. But our question is this going to last? Is this going to weather the storm through this downturn? We see arguments on both sides. So on the one hand, we think that people could view this as, view climate tech and the big questions facing the world as more important than ever. And then we could also see companies focusing on the core of what they do, and not going into innovation in climate tech. And so I think this is a really make or break moment for climate tech. I think if we're able to ride the wave of popularity that started before this, that would really be a breakout moment. But it could also be a setback. This is something that we also think will have differential impacts depending on geography. So that's something that we're really monitoring. Related to this question is question number 5, which is, ESG as a metric and as a priority for LPs, which are the investors in venture capital funds, had been a really big and rising trend. EIT has been in the process of raising our second fund over the last year or so. We've closed about $700 million of that fund, and we saw overwhelming interest from limited partners in ESG-friendly funds. And that is something that I'm curious to see what will happen going forward. LPs are going to have smaller pools of capital to invest from. Will they say, with these slightly more limited funds, are we going to be even more picky that you need to have these ESG metrics and focus, or are they going to de-emphasize it and focus on funds that are more generalist? That'll be an important factor in how venture capital funds are going to be able to raise from LPs going forward who are focused in the climate tech space. EIT in particular, we've been focused on this effort. We've quantified the ESG metrics for our whole portfolio, and we'll continue to do that going forward because it's been something that's really been resonating. Question number 6 is more specifically the impacts for utilities. We've been polling our utilities on, what are the impacts they're seeing, what do they think is going to happen in the future, and what does that mean for startups who are working with them? Across the board, we really are seeing OPEX reductions across our utilities. On the CapEx side, it's a little more unclear. Certainly folks are seeing delays, but in the longer term, it's unclear what will happen in the CapEx side. Certainly, we're seeing delays on rate cases, permitting, regulatory approvals, and we think that that's going to have a real impact on delays, but it's unclear on the overall CapEx what will happen. For us, it's really important what's happening with innovation budgets. We've seen a range across our LPs, some budgets, really cut, some not affected at all. So that's something that's going to differ by utility. And then finally, what are their priorities right now? Really, they're looking for specific COVID solutions, savings on O&M, things that can help them with forecasting. Those are the type of things that utilities are going to adopt immediately. And we've seen our utility LPs adopt a number of solutions through this time, which is really encouraging. But overall, I think there's going to need to be some patience in terms of working with utilities commercially from the startup perspective through this time. And then finally, don't let any recession go to waste. We really are focusing on where are the opportunities here. What could be counter-cyclical in this space, which is to say they do better because of this situation, or at least what are things that are less impacted. So we've been, asking around. We put this question to our utilities of, do you think people will buy more generators? They said yes. They think that augmented reality will be a bigger market in this space, that building energy management will become more important, and that utilities will migrate to the cloud faster. And so these are just some spaces where we see opportunities, but as the situation becomes clearer over the coming months and years, we're really focusing on where the opportunities are in the space. So more questions than answers. We're really interested to see what happens in the near term, and thanks for having me.
Cassie, thanks for being on. Great overview. I know a number of questions out there, and folks can learn more about your fund and your work at energyimpactpartners.com. This presentation will be up on gridforward.com or .org, our website. This is Bryce Yonker, Executive Director of Grid Forward. Thanks for being on.